All right, what is going on, everybody? How's everybody doing on this fantastic Tuesday morning? It is the week of Thanksgiving, so the markets are doing some crazy things. We've seen a little bit of weird price action yesterday. Yeah, so just be careful if you're trying to take intraday trades in this environment. Just understand that it is a low liquid environment, so you can see pretty nasty whipsaws both up and down and in the same day even. Yesterday on Bitcoin intraday, we had a spike in the DXY. Let me get over here real quick. So let's just start off first by saying Sunday night we did not get the close we wanted. If you didn't take a look at Sunday's upload, it was supposed to be on Saturday, but it came out on Sunday. You'll see that I discussed these levels in detail. And basically, I wanted to see that 2 week that 2 week closure above 2 week resistance, as well as that ascending trend line that's inside of the overall pitchfork. We didn't get it. So basically, that means if you don't get those closes, then you can't be looking for bullish entries. And then you can see here that basically you tested it perfectly and then just went straight down. So yesterday, during intraday, we had a spike to the upside on the DXY. Also, the S&P 500 had this same spike to the upside, and Bitcoin had the spike to the upside. Now, generally, I would have looked at this as a selling opportunity, simply because we got the close towards the bearish side and a few other reasons, but I was looking at Bitcoin as a selling opportunity. But the problem is since it was spiking to the upside, as well as the DXY and the S&P 500, the risk markets plus the dollar all spiking at the same time with Bitcoin, I was just like, which one is the fake out, right? So I wasn't jumping on this trade, the short on Bitcoin, because of that simple fact. I only like to take trades when I know or where I feel as if the probabilities are on my side. Being in a down market, being that we closed the weekly red, all this other stuff indicated that Bitcoin would have been a selling opportunity on any pop in price. This was a pretty big pop, or a pretty big pop. And if I just scroll over here to this stuff over here, you can see like this wick came almost down to take out these stops. So it did take out any stops that got long from, the Asian session into the London session and into the New York session. This spike was at 9 o'clock, which is 1 hour after the New York Open. The New York Open is at 8 a.m. Eastern Standard Time. So when we traded up into the 1 hour Heath level there, or your hourly supply, that would have been the position to take. Would have stopped resting just above that supply candles high, because if you get a wick up above that, then chances are you're on the wrong side of the trade, and at that point in time I would want to get out of my position. So that's where I would have placed the stop had I jumped on it. Just shortly after, we were trading down here, so we were trading at the midpoint of this hourly spike. But when I realized that it was going to be the S&P 500 and Bitcoin that were the fake out move, and at that point you can see I was looking for Bitcoin to trade back up as close to this hourly close as possible. If that would have occurred, I would have taken a short position, and that trade would have been a nice one. But like I said, I didn't know for sure. I knew one of them was going to be the fake out. I just didn't know which one. The hourly was trading at quarterly resistance. The hourly was trading at the DXY was trading at quarterly resistance. So I was kind of suspecting that this spike in DXY might be the fake out. It's a little bit extended as well to the upside, and Bitcoin's had a pretty nice pullback. So it was like one of those scenarios where you're going to come across in trading almost on a weekly basis. And my suggestion to you new traders is that you sit on the fence. All right, you sit on your hands. If you're not exactly sure which one is the fake out, instead of eating a 1% or a 5% loss, whatever percentage you're trading with, just sit on your hands. You're going to get another opportunity, right? There's opportunities inside of the crypto, Forex, and stock markets every single day. You're not going to be able to catch all of them. So you might as well get used to missing them. I miss trades all the time, and People don't like it when I don't take trades that they think I should, and even when they turn out to work. You know what I mean? But I've been doing this long enough to know that, hey, if it's not exactly the way I want it, if I don't have my edge, then I'm not jumping in. And even though this did fit the narrative of my edge because it was inside of all my levels and all this other stuff, it was one of those things where it could have went either way. All right, so we did not take that. So right now you're seeing that we did. All right, so now we're seeing that we took out this 2-week target yesterday. We didn't take it out on the initial push lower, but that would have been the target if I would have been able to take that position. That's 2 week. That's the last 2 week candles low. All right, let's go look at it. Wicks are generally targets. Yes, the higher time frame wicks, wick highs and wick lows can act as support or resistance, but generally I'm looking for those areas as targets. And you can see here with this spike, we just took out that 2 week low. So now that the high probable entry is gone, the high probable entry was yesterday, unfortunately, and it traded straight down to the target. We've smoked the target, so there is no high probable entry left on the table. Whether Bitcoin goes up or down, the high probable trade is over. All right. Now, if you try to get long here, you're trying to pick a bottom in a down trending market. So just be very careful. Will Bitcoin go up and make new all-time highs from here? It's absolutely possible. But the high probable entry is over with. So now if you're looking for bullish entries, in my opinion, you must wait on at least this. At least you need a daily close above these crucial swings right here. And then you need a higher low support to be formed. If that were to occur, then we'll take bullish entries up to the next level of possible resistance, which would be this daily swing high up here at 65,000 bucks. But first and foremost, that has to happen. As of right now, you have a daily Heath level staring you right in the face for a possible short entry. However, since you just took out the swing low on the 2 week time frame, that was your high probable setup. I would not take that short, whether it works or not. All right. You are trading at support. Daily support is right there. It's been daily support since we tested it on this day. It's still support, even though you've wicked below it for any new subscribers. If you are new, welcome. But if you have wicked through the level, it makes no difference. The close is what matters. So since you have not closed below 66 or 56,005 bucks, this is support. It is daily support until you get a daily close below it. Bitcoin's looking like it's just seeing a little bit of a pullback. This has been a nice little down move. You have taken out key areas, so you have tested two really good zones for liquidity. So Bitcoin could absolutely turn around here. Just not looking for it. And like I said, since this week is the Thanksgiving week, there's not a whole lot of participants in the market. Most of your bigger participants are on vacation this week. So be very careful if taking new positions. Ultimately, this was the 2 week level that we needed to get a close above. That's 2 week resistance. It's $59,985. So you could potentially see another test of that level. It's not far from current price. Not far at all. So yeah, and I do suspect that before the market rolls over, it will go up and take out that stuff. At least, right? At least. I mean, technically, to be honest with you, if Bitcoin does break out above this descending trend line here, I will probably more than likely be targeting this wick high. So if we get above this trend line on at least an 8-hour closing basis, then I'll potentially look to target $61,418. And then my next target would be, where's it at? It's up here. This swing high, right? That's the first swing high that we put in on this once we knew that we were heading lower. So this is your old all-time high here. Yep, and there's your supply zone. That would have been the absolute most perfect entry for the short. That's what we look for on this channel, and that's how we execute on this channel. There is no hindsight garbage. What you are seeing is an actual trader take actual trades during the day. So let me go talk about the only two FX setups that I've seen. First one being NZD CAD. We're looking at this for a potential short. Let's go into the daily. And then the other one is Aussie Yen. Those are the only two potential setups I see today. So let me get those positions off, so that way I can show you the lines. Just bear with me. Nope, not that. Where's it at? See, TradingView did a bunch of different stuff. So, all right. So here's yesterday's close. This is the daily candle that we're on. You can see we've already taken out yesterday's low, and that's okay. We have daily support down here. This is an old daily support, and it acted as new daily support. So here's your old daily res. Here's your breakout above daily res, and it's a very, very good breakout. You never came back for a retest. You traded sideways, took out the high of the market. Then this was taking out the low of the market. Basically, the market, when you're trading sideways like this, would have been this high, it would have been that low. All right, so when you took out that, well, not that low, sorry, this low, because it's the lowest one. So when this candle trades up, it takes out the high side of the range. Then you retreat, take out the low side of the range. So now you're in price discovery. You have liquidated both sides of the daily range. There's daily support at 87,810, and it held absolutely flawless. Yes, you wicked below, but the close is what's important. Had you been watching this on the closing basis, as soon as you wick below, that could have been a potential bullish entry. We never know if our trades are going to work or not. That's why we wait for these high probable areas to look for those potential entries, but then you traded higher. So you have broken out above daily res. So right now it can be either way on this one, right? NZD CAD, here's your 50 spot. Yesterday was a test of it and a close at it. Absolutely at it. So today is going to be one of those days that's going to lure traders in both to the long side and to the short side, and the market will let those whoever's right know in the next day or so. Because you're under your 50, but that's only because you're red on the day. You're red on the day. So this thing could be up here if this closes bullish on the day. I don't think it's going to. My target is daily low. I am looking for shorts. The reason is because you got to bounce off of this moving average right here. So this is going to make everybody think that it's going up, rejecting from the moving average. So that is my target. So essentially my entry would have wanted to be yesterday's close if at possible, as that would pull back and give us a nice range expansion back to the downside, targeting this wick low. That's your target. You get within 5 pips to that, you're taking 2/3 of your profits, and you're moving your stop to break even. I generally don't like taking positions this early because we're 2 hours from the London Open and we're 2 hours till the New York Open. So we're kind of in that spot where you're definitely going to get a bunch of sideways trading or fake outs to the downside or fake outs to the upside. I generally like to take my FX positions from 7 a.m. to 10 a.m. After 10, I am not executing any new positions. If I am not in a trade, I wait until the next day, simply because that's my entry window. That's where I want to enter. That's your last open of the daily range expansion, is the New York session. That's where the majority of the rest of the volume is going to come in at that time. So you're either going to be an inside day or you're going to get a range expansion, one way or the other. And on NZD CAD, I am looking for that to be to the downside. So yeah, we'll see what happens. And then the other one, let's see here. The spread was really terrible on this. You can see 3.8 pips. So I was trying to take entry. Let's go to the intraday charts. I was trying to take entry as close to hourly res as possible. Here is hourly res. This white line is yesterday's close. Okay, that's yesterday's close. So as long as we're closing hourlies below that, even if it trades up to yesterday's close, which would be this hourly resistance as well, as long as you're closing hourlies below that, I believe you can see more downside. If you get an hourly close above that, you're not looking for shorts. All right. If you get a close above yesterday's close, which is today's open, an hourly close above that, I'm not going to be looking for shorts anymore. You can see that's where this stop loss is. This is a paper trading account. I do not show actual live funds on public, right? Because I'm not selling anything, so there's no reason for it. I'm just trying to teach you guys the actual way to trade these markets the right way, or at least a profitable way. But I will take this position if it gets up here. All right. If it gets up closer to yesterday's close as possible. What I basically want to see is I want to see a wick above this hourly res. We did kind of sort of get that already. So that's when I took the position when we were up there, but 3.8 pip spread. My entry is all the way down here. That's what sucks about sometimes trading NZD pairs, which is why I do not trade them often, because it doesn't matter which broker you have, you're going to have a terrible spread on this pair. But there's other ways to trade. You don't have to get a spread account. You can get an ECN account for FX brokers as well, where you're paying for the closest bid or ask. That's where you will get filled, and you will pay fees on your entries. And you will get charged per how big your position is and how often you trade. You will get fees. And I'm not sure which is worse, to be honest with you, the spread or the other. I've just always had a spread account for FX. I have an ECN account for my stocks, but for FX, it's that. So let's move on to Aussie Yen. Aussie Yen is another one. This is daily res. Let's go out to the daily, and then we'll go look at the crypto pairs, guys, because these are the only two FX trades I see today. And that doesn't mean that they're going to work. That just means that's the only two that I'm even willing to take a position on. Here's your daily range on Aussie Yen. If we go out and look at this, you can see that we are under the 50 on the RSI, which means, yes, the bears are in control of this asset for now. If we pull up our moving averages, you can see that you're not extremely bearish. Your price is only under the 20 and the 50 EMAs. All right. Right now, the 100 exponential moving average is holding price. That's what this bounce came from. All right. That 100 exponential moving average. So price traded down to that, and you're getting a bounce. I still like it to the short side, but you can see that it is a little bit extended to the downside. All right. A little bit extended to the downside. I wouldn't consider this a pullback or even this a pullback. But it is what it is. Right now, it's giving us an opportunity to potentially look for that daily range to expand down to the underneath side and take out that daily low, which is today's low. So here is daily support. That's the bearish close, the lowest bearish close, 82,474. And if we go into intraday, also that upper side, that's your daily res. Currently, you have a daily resistance there, and you have a daily resistance here. When you're looking for entries, you are using the closest one to near-term price. Apologies, closest one to near-term price. That's what you're looking for. So here it is. Boom. You can see that it has been tested on the daily, hourlies, trading up into daily resistance now. Now you're messing with it. So daily open is also the exact daily res. So let's just get rid of that. So 1700 hours on FX is your daily open. And you can see that that is absolutely flawless. So daily resistance also coincides with your daily open. You have traded down and you've closed multiple candles below. So it does look like it is looking for continuation to the downside. So yeah, this actually looks better than the other one, in my opinion, just because how the RSI is situated and everything. And this wick low on this hourly candle will be your target. It would be safe to go ahead and take profits at the hourly support, which is 82,710. If you are able to get into this position, this is going to be your target. Now, once that happens, take 2/3 of your position off. You move your stop to break even. So that way, if you do get continuation on down to your daily support, you are already positioned for that. Your risk is off the table and you've already made money. So there's 3 checks against the fact that you can just let that rest ride. And if you do let that rest ride, that rest can end up potentially paying you double what you made on the initial position. I'll go over here just to show you what I'm talking about. I did this same exact thing the way I'm talking this morning about taking my entries on pound yen the other day. Everything was absolutely flawless. This was my entry when we traded up into daily Heath level. Right there is where I executed my short position. After we took out the daily low, which we did here, I took 2/3 of my position off. I moved my stop better than break even. All the risk is off the table. I've already put money in my bank account. Everything is good. And look what's happened since. Boom, boom, boom. Yes, this is probably about 4x as to what I took on this initial trade. So the money that I got paid on this first trade, I'm up about 4x. So more. That's why I let 1/3 of the position run, because over a period of a few weeks, that 1/3 position could potentially pay you a lot more than your initial trade. And that's all bank's money, right? That's not my money. It's unrealized P&L, so that's what I'm risking, but it's the house's money. I have zero risk that's from my account left in the market. So you can play with that, right? You can play with that. And as of right now, like I said, I'm up almost 4x on these unrealized gains from that initial position. And I'm also currently still in Euro Aussie short. All right. And I took that position here on this day when we traded up into daily resistance. All right. It looks like I still have something there. There it is. So here you can see this was my entry. Boom, 2.56 to 1. So I took my position, or I took my entry on this wick here. The white line is my actual entry. Took it right there. This was where I took profits. Why? Because that was the daily low. Boom. Move my stop to break even. All the risk is off. And so far, yeah, it's been continuing down. So we are back up. This red line indicates where current price is trading. So we are, about halfway up to where the initial was. But to be honest with you, if it comes up and takes me out, I don't care. Zero risk. And I made money on the trade. Now, if you don't want to let that unrealized P&L go away, you can always take another half off of whatever's left on the table. Obviously, the more you chip away at that, the less position size you're going to have, but that's a way to ensure that you keep some of that unrealized P&L as well. But generally, I won't do that if I'm expecting a trend to the other side, like on pound yen. I'm not expecting a trend on this one, so what I'm probably going to do after I get off the live stream is go ahead and exit this position, because this daily range looks like it's gearing up for a bullish run. And if Aussie goes lower, then you will see this go up. So I'll probably go ahead and exit this position. And 90% of the reason why is because there's not much juice left on this lemon to squeeze. This thing is extended severely to the downside, right? And I'm looking for lower prices. I just don't see me getting too much more out of it. If we scroll out, you can see, yeah, it's had a pretty decent run to the downside. So it may chop around down in here. Euro Aussie's good for that. We'll see what happens. I am expecting a little bit of risk off, but it's not really played out this week. I did get a bounce on the JXY, and that helped out my pound yen position. But yesterday it went right back below those lows. So I don't know what's going on there. You usually will see JXY go up because it's a risk-off market, as well as the Swiss franc, but neither one of them are playing like that. So it appears that we're seeing dollar strength purely on the Fed. And the S&P 500 doesn't look like risk-off either. We'll just go look at it quickly, and then we'll go check out the rest of the crypto pairs. Here it is, S&P 500. That's not what risk-off looks like. This is potentially what risk off looks like. This just looks like it's pulling back off of all-time highs that we just put in yesterday. Would I be taking potential shorts on the S&P 500 for today? Probably, and I would only be aiming for today's low. that wick low. Here's the thing, you are trading below daily support, but yesterday you closed above it. All right, you closed above it. So yeah, be careful. Be careful. I would have liked to see this close below. That would make me a whole lot better on taking SPX shorts to the downside or buying puts. I don't know how you trade the S&P 500. If you trade the SPX, then that's fine, or the SPY, either way, or options. If you're buying puts, you want to buy puts as close to 46,880 as possible, and make sure you have a stop at around 46.94, today's high. All right, today's high will be your stop, and you're aiming for today's low. All right, so that's it. That's it on the actual positions as far as FX and S&P's concerned. Let's go look at cryptos. There it is. Sorry. Actually, let's go look at ETH because it's not on here. I got ETH over here. So there's Ethereum, right? The daily chart. Nice ascending trend line to the upside. Fantastic bullish trend. You've broken down that bullish trend. And you did it on spectacular fashion. Meaning, not only did you break down below that trend line, you broke down hard and closed low. So this is weakness, right? Or a lot of selling. This was support. You closed below it. That's your old all-time high. Let's get rid of that. Let's get rid of that. And let's use you. All right. There was support. Let's get rid of you. You're done as well. Oh, come on. What's going on? It's a different mouse. Jimenez told me yesterday, or the day before yesterday, that if I move my mouse closer to my transceiver, it might help with the glitchiness, and man, it did. So thank you once again, Jimenez. That was awesome. So yeah, Ethereum, this was support. There's your close below. Tested that support as resistance, and it held, and then you got a little push higher just to liquidate any intraday shorts, then your expansion to the downside. Boom. But you have a new support here, right? So that's why you failed to get any lower. Buyers picked it up here. Nice little move to the upside, and now you're seeing this. This is absolutely a range. You are making a range. So we'll just give it some time to see what happens. Daily res is there. Daily support is there. That is your near-term range. Weekly, let's go look at what last week did, so that way we can try to figure out what we did, what we're going to do this week. All right, so last week, nice bearish move to the downside. It's not an outside week or an engulfing, as you did not take out this week's high, but it is a nasty bearish candle nonetheless. So this is basically around the midpoint of last week's expansion to the downside. This week so far, you're trading as an inside week, which means choppy. All right, you're going to be aiming either for your weekly high or your weekly low to be taken out, and chances are, since you're trading so close to the low, I would probably be looking for that low to be taken out before you go on up into those highs. So basically, that's your bullish target. This is your bearish target. But as far as intraday or intra-week support and resistance goes, this is your range. So your next weekly range will probably look like something like this. See how that works? This is your weekly range. Next week will probably look like something like that. So that's what we're looking for on Ethereum. Yes, we are bearish near term only, looking for that weekly low to be taken out. That weekly low is right there. And remember, there's daily support just under it. So it's not like, I'm not like uber bearish either. But for the near term, I can see 32.23 or 39.23 getting taken out for sure. Today looks like a pullback day from yesterday's bearishness. I don't like this, so I wouldn't take the position because you tested nothing. You didn't test yesterday's. You didn't test yesterday's open. You didn't test the daily Heath level. You didn't test anything of note. So you're trading inside of yesterday's range. This is the very definition of an inside day candle or range bound intraday price action. There's a good possibility it can break out either way, to the upside or the downside, but we'll just have to wait and see what it does. Right now, there's no position to take on it. None. Looks like the hourly Heath level's holding. Yesterday's bullish fake out is holding. So let's zoom in and I'll show you what I'm talking about. So this is yesterday's fake out candle to the upside. I don't like when we have really big range candles to use as supply or demand zones. But as you can see, this one's holding. I mean, you can't get any better than that. You closed right on it. Right on it. So, I mean, yeah. Show me someone that's more accurate. Anyways, that's what's holding for now. So maybe a short position up there. But I don't like these nasty wicks, man. Don't like them. So I'll probably leave this alone. Or I don't actually even trade it. I'm just saying that for you guys. I would probably leave this one alone. Simply because it's wicking all over the place. You have a really long wick to the downside, which would have stopped any longs out. They got long on this, looking to get long on the demand zone there. However, if you follow my rules, you would not have done so simply because you closed inside of it, right? So yeah, wouldn't have got long. I guess just watch 41.80 spot 71 for intraday resistance. If you close an hourly above that price, then there's a good chance you're going to go up and take out that wick high right there. And at that point, I wouldn't know what to do. So I would just leave it alone. Just leave it alone. Let me see here. What's people saying this morning? Good morning, good morning, good morning. Happy Turkey Day week to everybody. Same to you, Tom. Happy Thanksgiving week to all in the U.S. I don't know if you guys have Thanksgiving where you are, Tom, but I wish you have a great week yourself anyways. Feeling great to be here. Thank you for being here, Edom. Absolutely. Thank you so much. Ajith, my man, what is happening? Good morning. He checked BTC monthly close October 2017. What monthly close? August. All right, so check BTC monthly close August through October. Let's go see what you're saying, my man. Let's go see what you're saying. 2017 here. And you said August to October. So yeah, you had a nice expansion. Here's your August open. That's your monthly open on August. And then October is here. So expansion, retest, expansion. So that's what you're saying for this. He closed August. All right. August to October. There's August, retest. Yeah. It looks almost identical. The only problem was this one was at all-time highs when you made this impulse correction, impulse move. You were already trading at all-time highs. When you did it this year from August to October, you had already made all-time highs and you had a 50% correction. So this happened the same way. Impulse, correction, impulse, and even made a new all-time high. So yeah, I mean, like I said on Sunday's upload, I'm not bearish on Bitcoin longer term. This monthly range is tiny. You can trade all the way down to this monthly candle and still remain bullish. Oh, come on. Here, let's do it this way. I'll show you what I'm talking about. You can trade all the way down to $47,110, find support, and then go. Absolutely. Absolutely. It's getting a little bit long in the tooth, and with the 4-year market cycle models, December's called the high in the last 2 bullish market phases. So I think you're going to see a lot of selling in December, one way or the other. I could be wrong though, right? I kind of assumed that this was done. And like I said, I'll be wrong from time to time. Obviously, nobody knows what's going to do. And Edom says, boss, can you please do a video on how to identify order blocks? The ones I see on YouTube ain't easy or clear. Trust your teachings. Thanks. Well, order block is basically, I don't know, because I know the guy that supposedly invented order blocks is ICT or whatever, Inner Circle Trader guy. He sells courses, right? So he's not going to tell you. He's not going to tell you what it is or how to find it. His teachings are vague on the matter. I've only know about it because someone asked me to go look because they said my strategy looks familiar to his. It's not even close. I have no idea what his rules constitute as an order block. From what I can tell, they're just simple supply and demand zones, right? But I'm sure he will say different, but he also wants you to pay $1,200 to tell you. And I don't think you should do that, right? It's retarded. You should never pay a YouTuber $1,200. The info that you're looking for is already on the channel, my friend. It's called How to Identify Supply and Demand. So if you know, just go looking in the channel and find it, or one of my mods could throw it up there for you. How to identify supply and demand. It pretty much goes over it in depth. And it also tells you about actual support and resistance. .USD, please. Let's go look. Since you said USD, I'm going to look at it on the Coinbase data feed. Looks fantastic. This is your monthly on DOT. And look at this. Like, it's absolutely bullish. I know that there's a lot more data on other exchanges, but there's no point in looking at any of this stuff over here anyways, because it just goes straight up. And it's been continuing to go straight up. You made a new all-time high on this monthly. Well, let's just go look, because I don't want to say it is an all-time high. If it's not, I don't want Kraken either. I want Binance. Binance has the most data. It is the all-time high. So you made a new all-time high and you're pulling back. Same scenario. You have a monthly demand zone down here or an order block for Edom. It's the same thing. It's the opening price of a bearish candle. Demand. Opening price, bearish candles. Supply would be an opening price of bullish candles. So this would be supply. Once you fall below it, you can see this was retested as supply and it held. You got a monthly close lower, but then you broke out above it the next month. But let's get off the monthly, because I know not many people have that much of a time span. Everybody's pretty quickly wanting to know what's going on now. Where did Coinbase go? There it is. It just looks better. It's not as wiki. So here's your daily chart. You are trading lower. You made a new all-time high and instantly rejected. There was support here. Actually, since that was a bear trap, I wouldn't use that one. I would use this one, because your trap candles, they will be support eventually, but chances are your actual support level is going to be support before the trap was put in. The reason it's a trap is because you had a nasty big down move. You closed below support, but then just a week later, you're trading much, much higher. So you took that out. That's a trap. And if you look here, when you traded down back to this support, you closed above it, traded below it, closed above it. This is the first time that you actually broke it. And since this candle's open is still intact, you are looking for lower prices, right? This open, this is your impulse move to the downside. This is the candle that broke the camel's back. In other words, you have taken out support to the downside, both supports, the real support and then the fake out support, or your bear trap support, you took it out. So as long as you're trading and closing dailies below 42.75, you're looking for shorts. You're at support on the daily now. The new support is going to be this, and you can see that you're trading right at it today. It's a small range daily candle so far. If we go in and look, it looks like people are trying to buy it here. All right. I don't know if people are buying it, but you can see it's definitely having trouble getting below it and then getting continuation away from it. So it looks like it's trying to find support. These things generally trade, whatever Bitcoin does, these things usually do the same thing. So if Bitcoin found support last night or tonight and starts to trade higher, so will DOT, right? So will DOT. Generally, not all of them, but most of them do exactly the same thing. So just keep an eye on 3906. That's going to be your daily support. If you're closing 4-hour candles below it, which you did slightly just then, then maybe I wouldn't be looking for longs. But this is your range, and you're at the low end of the range, so you probably will be looking for a long, and today or tomorrow, just up to the next area of resistance anyways. We focus on intraday and intra-week moves here, so we're basically looking for very small ranges to trade. So if you're looking for like a swing trade, then what I would do is I would wait until you at least get above this 8-hour resistance on an 8-hour closing basis. Then I would look to get long if you get a wick back down to this candle, which would be demand if you get a bullish close above this resistance. So it'll look like this. Which one is it? It's this one, right? So it'll look something like this. You get up, you close, and you come back down. Boom. That's where you're looking for your entry. And your target would be this next resistance. Oh, shit. Here. Right there. Something like that. Right? Now, that's probably not going to be as pretty as that or as simple as that, but that's generally what you're looking for. Unless you start closing 8-hour candles below support. If you take out this support on an 8-hour closing basis, you're probably going lower. You're probably going all the way down to $36, which is your next area of old resistance. November's low 2017 was $5,500. Coinbase data. Yeah. Yeah, Bitcoin's at $60,000, guys. It's extended, to say the very least. Just a little over a year ago, back in March, when the Wu flu happened, you could have bought Bitcoin for $3,000, like $3,500, and now it's trading at $60K. Little bit extended. Excuse me. All right. What's up, Wes? Good morning, he says Agile Leader. Good morning, the Agile Leader. Good morning, everybody. Now we looked at thoughts about XLM. Stellar. Stellar's breaking down. It's at support, to be fair. I mean, it's trading at daily support. So that's going to be your new support. You even took it out with this one. So follow me, please. Thank you. There's your support at for now. And you are coming in for a test of it right now. Would I get long there? Yeah, I mean, if I didn't care about losing 1% or whatever, I don't know how you're positioning yourself. But 32 cents is definitely going to be daily support. I don't like the fact that you tried to get this expansion and then immediately was thwarted with selling. But like I said, if Bitcoin starts to go higher, chances are this will too. So if you go out and look at the dailies, it looks almost identical, except for one caveat. Obviously, this didn't make new all-time highs since the April sell-off. It has not went back up and made new all-time highs. So this is showing weakness across the board because all your other cryptos already took out that all-time high. This one is still trading under the 618 retracement of your main April decline. What do I mean by that? You take your fib retracement tool, put it there, go all the way down to that low, and you're not even trading at the 50%. You haven't even been able to get above on a daily closing basis of your 382. That's real weak. Compared to the rest of the crypto market, it's extremely weak. But you are trading at support, so there's a 50-50 chance that you could take a little piece here. Make sure you're not risking too much. Make sure you're not going 100x long, as Wes likes to do all the time. But he's always joking when he says that stuff, guys. Don't take him seriously. He's a nutcase. But yeah, so don't go 100x long at 33 cents. But if you want to put on a small piece and then look to maybe buy more if you get down to 25 cents, that's called averaging down. I don't see nothing wrong with that. You'd have an average cost basis of around 28 cents. And then if you do start trading back up Again, I tell you one thing, if you get a daily close above this resistance here, you're probably going to get a nice move up to 50 cents, 56 cents. Because there's a lot of stops setting up here. A lot of them. Lots and lots of liquidity setting up there. This candle did liquidate most of them though. So there's not too many left. See that? Spoop. And then you rejected. So I mean, it's weak. Right? It's weak. It's not strong. You would have broken out if you were strong right here. Once you got above that, tapped into all that liquidity, if this asset was strong, it would have went then. But it didn't. It got rejected. So watch daily support. Your daily support is there. 32 cents. Good morning, says Alexander. Good morning. Sidelines for me. I was picking bottom last pullback on BTC a few weeks ago. Yeah, picking bottoms and tops is difficult. It's sexy when it works, but it very rarely ever works. So I don't suggest doing that. Good morning, y'all. But you're coming a long ways, Wes. Long ways, my friend. You're doing a lot better than you were a month ago, even 2 months ago. Thanks, he says. Toya, you are welcome, my friend. Thank you so much, Ed, for the hitting him up with the... Yeah, thank you so much for that. And Wes did the same thing. Yeah, basically, if you're new to trading, guys, and you're new to this channel, there is a thing on the channel that says beginner trader playlist. That basically goes over the strategy in depth. I am going to do better videos. It's just, I'm going to wait until after the new year. Once we get into the new year, things will settle down a little bit maybe, and then I can start working more on that stuff. It's a lot of work to do these videos, and I got other projects I do after I trade, so we'll see. Where was I, though? I got lost. There we go. Good morning, Daga Rogers. What's up? How's ETH, USDT, Binance Perp futures? Oh, let's go look at them. On Binance. So I'm not sure if this is the actual perp future, because I can't pull up the Bitcoin inverse swap contract for KuCoin on TradingView either, but it follows pretty closely to the spot price. So I'm assuming that the perpetual swap contracts on Binance probably follow spot pretty closely, but I already basically did ETH. It's looking like it's wanting to reject. But actually, to be fair on this one, you have tested important and relevant levels. Remember on Ethereum, on just regular spot price, on Coinbase, you did not test that level. You haven't tested any relevant levels. But on this one, the ETH USDT on Binance, you have tested daily supply, and you're pulling back away from it. So that probably would have been the entry. I don't see nothing now. Yeah, that definitely would have been the entry, and that was just an hour ago. That would have been a nice trade in itself. But yeah, it's at daily support, so I wouldn't be looking for new shorts. Especially, let's just wait and see what Bitcoin does. So there's going to be your range until you get below it or above it. And you're kind of like in the middle of that range also. So that would have been the entry, right? Now there is none. And this is more than likely the target. Could you please look at KDA USDT on KuCoin? Well, it's not all-time high, but there's no proof that that's even a real wick. I would have to go into smaller time frames to see if it is. But I mean, you're trading at the highs. It's been a phenomenal trend since April. All right. So April, May, June, July. So you put in the same low around the same time that Bitcoin did. I mean, that was just a fantastic trade. Absolutely. It's pulling back. Oh, over 8,000%. I mean, come on. Jeez. Gotta love crypto. Gotta love crypto. So, yeah. I mean, it looks like we analyzed this not too long ago. These are old levels. This would have been what I wanted to see hold as support. It did not. You did get a daily close below it. And then you can basically see how resistance has held. So that's the very definition of making lower lows and lower highs. But it's not like ridiculous. It's not massive ranges. So it's not like intense selling pressure or nothing like that. You're just slowly pulling back. You tested daily support at $15.74, and you're trading as an inside day today. So I would not be taking entries right now. But if we get back down to about $15.74, as long as that area holds a support on a 4 hour or 8 hour closing basis, I might look to take a long, targeting at least this area here, because that's going to be your new supply zone, 1875. So like if you get down here, like maybe throw a wick through, take out that wick low, and then close a 4 hour back above it. Yeah, I might be looking to take entry on the next push lower, and I'd be targeting this at 1875. Be a $3 gain on however many coins you buy. It's not bad. If you buy 1,000 of them, that's $3,000 worth of P&L. So yeah. So let us just, right now there's nothing to do. You're literally trading as an inside day. To be honest with you, I'd be looking, if I was looking to short it, I would be looking to take that short right about now or there at 1749. That's where I would have gotten short. That's your daily open, and it's also yesterday's close. So those are usually pretty good spots to look for entries for intraday trading on most assets. So yeah, if this candle's low, if you get a close below this bullish candle, this was nothing more than a trap. Well, not even a successful one, because you didn't close above resistance, but you did take out any stops of anybody that got short on this push. So yeah, I would leave it alone for now. Let it get closer to $15 before making any decisions. Evening, he says, Alan P. What's up, Alan? Nice to see you, my friend. My pleasure. KF says, hi there. Would you please do SNX USDT on KuCoin? Yeah, let's go look at it. Man, that's your daily range is getting clobbered, huh? That would have been a good trade to take. Let's use this as a learning example. All right, so lower highs and lower lows. High, low. This is your lower high, new lower low on the hourly. So that tells you that this week's order flow is bearish. So you're looking to sell bullish pops, right? But I wouldn't have taken this short. Right now, I wouldn't have, because I didn't get a test of what I wanted. And what I would have wanted was to see at least a test of this, which is just old support until you broke down, or a test of, well, let's just call that one it, because that other hourly candle is too small, or that. That's where I would have looked to get short. And yeah, so, but I mean, that's just today, right? That's just today. These markets are traded on a second to second basis, day to day. So generally speaking, I mean, well, I just wouldn't even say that because I don't want to confuse anybody, but yeah, as of today, you're trying to take out support. There's your daily support. There's my baby's alarm telling me to shut up. All right, here we go. $8.19 was support. You closed below it yesterday, but this thing has got very little liquidity in it, meaning that you close and then in a split second you gap up, right? You gapped up. So there's very little liquidity in this. When you see this stuff, where was that? Right here. When you see this stuff, that means there's zero market makers sitting on the bid or the ask. So from the second this candle closed to the second this candle opened, your next bid or ask was setting there at $9.96. When you closed, your market maker was setting there at $9.92. So that's why you have a gap up in price, because nobody's sitting on the bid or ask at this price. Once it closed there, that means all the liquidity of all the orders sitting there at that price were gone. Next area of liquidity or where your next market maker setting, your next bid and ask is up there. That's why it gaps from here to there. So that means there's not much liquidity in the asset. That's a daily candle, and you're getting liquidity dips like that. Here's another one. You close here, very next second, you gap up. You gapped up. So there's not a lot of liquidity in this asset. So be very careful. When there's not a lot of liquidity in an asset, you can get spontaneous 100x wicks. All right, so just be careful. But you're taking out support to the downside. Next area of support is all the way down to here. Not there, here. $7.55. So that looks like that's the target. Is it possible that once you take out this wick low, which you already have, you retreat back up into this range? Absolutely, as that's generally what price does. Price is usually range bound more than it's trending, guys. Right? That's why I trade this strategy. Yes, it's fun to catch those trends like on pound yen and stuff, but it rarely happens. Prices chopping back and forth in a sideways range where the liquidity is most of the time. I think it's only trending like 32% of the time. So yeah, keep that in mind. But you're trending now to the downside and you're getting a little bit extended. You're not quite at oversold, which I don't buy oversold or nothing like that. I only care about the RSI where price is in reference to the 50 spot. The bears are in control of the asset for now, and you're trending lower. That would be my next area where you could see potential support. I wouldn't take a new short on today because you've already taken out the target. All right, so there's nothing to do on it today. Or, I mean, even if you're just trying to buy it for a swing trade, there's nothing to do today. If today closes back above this support, then I would look to go long on it. All right, this is support. If today's candle pulls all the way back, turns green, and then closes above $8.19, tomorrow I would look for a pullback. Then I would look to get long. And I would throw my stop under today's wick if that were to happen. But I don't know if that will. It's pretty bad. All right, guys, unfortunately it's 6:30. I have to get off here so I can find those positions and get everything situated. If you're new, welcome. Once again, thank you for being here. Also, if you have any questions, once YouTube's done processing this video, you can throw it in the comment section. I try to answer every question. All right, so just drop them down there. Yeah, you guys make sure you trade safe, trade smart. And as always, happy trading, everybody.